Okay, class, today we're going to talk about Chapter 6, Merchandising Businesses. Before we talk about any of the journal entries that will be applied to a merchandise business, we do have to understand that there's going to be certain accounts that are added to the chart of accounts for a merchandise business that will be different than a service business that you've previously learned in Chapters 1, 2, 3, 4, and some of 5. One of the new accounts is merchandise inventory. Merchandise inventory is an asset account. This particular account is the amounts that we hold for items that we buy for resale. Merchandising businesses could be Walmart, Kmart, Dillard's, Banana Republic, things like that. Merchandise inventory, again, is an asset and things that we hold for resale to our customers. You will then add 3 revenue accounts. The first one being sales, which is now going to be your revenue, as opposed to fees earned and other revenue accounts that you learned for service businesses. Sales discount is a revenue account. Sales returns and allowances is also a revenue account. Sales discounts actually discount the revenue and bring it down. Sometimes we offer discounts to our customers for a multitude of reasons. And then sales returns and allowances is an account that we use in the merchandise inventory system for having people return items, or allowances allow us to reduce the original sales price. So we apply it to this particular account. These two accounts, sales discount and sales returns and allowances, are actually considered to be contra revenue accounts. Now remember, that word contra means to contradict, which means it goes against revenue and it reduces it instead of adding to it. You will also be introduced to an expense account called cost of merchandise sold, commonly referred to out in the real world as cost of goods sold, COGS. This one can be abbreviated as COMS, cost of merchandise sold. This is actually the account that we convert the cost of the asset we bought to an expense when we sell it. For instance, if I buy a t-shirt that I paid 50 cents for it and I resell it for $1.50, my cost of merchandise sold is 50 cents. And then we have delivery expense. Delivery expense is basically a self-explanatory account. This is an account that we use simply just to apply delivery amounts to. This could be your UPS, your shipping charges, things like that. However, not everything that you might think is a delivery expense is going to be applied to delivery expenses. So we will talk about that later on in the chapter.